Hey everyone, welcome back to the channel. Today, taking a look at Square and we're going to forecast out their revenue. So I put a video out with their WACC and we were close to about a 15.5%, kind of signifying that this is a pretty high risk company based off their current valuation. I think if we look, they were valued at 101 billion. They're doing about 10 billion in revenue, but that number is significantly skewed and we'll go through that here in a second. So first, I've pulled in their historical income statement and we'll just kind of walk through it real quick, just so we're all kind of baselined on the same spot, and then we'll figure out a good way to forecast out the revenue. So they break their revenue out for us into 5 buckets, but I mean really it's only 4 now, but historically they did have Starbucks transaction revenue, but that went away in 2016. So it's really transaction-based revenue. And this is when you think about like the core product of Square. This is you swipe your credit card at, the little kiosk at the mall or at the coffee shop or whatever. When Square processes the payment, they charge 3%, and the majority of their revenue. Starbucks transaction, we don't have to worry about this anymore, but I believe that at one point they had a partnership with Starbucks to run some of the terminals for them. You have subscription and service-based revenue. Really what this is mostly driven by their Cash App, and it's primarily instant deposit fees. So my understanding is if you're using the Cash App and if someone sends you money or you need to send money or something, if you don't want to wait the like 3 day, bank holding period, you can pay a nominal, whatever percent to have the money instantly deposited into your account. So that's really what's driving that. There's some like web hosting and things of that, but it's not as material. It's really from the Cash App piece. Hardware revenue. This is them selling their swipers, the screens, the POS, but they're not making money on this piece of the business. So it's not really relevant. It's always been kind of something they lose money on. So they're selling the stuff for a loss. So they're selling it cheap. So restaurants, companies, individuals will hop on the platform. And the last piece is this fascinating thing called Bitcoin revenue. And, I think that this is a load of crap, if I'm being honest. Right, you'll see it looks like it's just growing tremendously, right? 167 million, 516 million in revenue, and then 4.6 billion dollars of revenue. Um, they they work as the principal. So on Cash App, you can buy and sell securities and cryptocurrencies and ETFs, and you can invest your balance. Basically, it's kind of like a little brokerage. And they started selling Bitcoin, and the way they've accounted for this is they're acting as a principal in the transaction. So what they're saying is when you go on the platform and say you go buy 1 Bitcoin, right? And let's see, what's a Bitcoin today? One Bitcoin today is $37,000. So say you're buying 1 Bitcoin on the platform. What they're going to do, they're going to go to Coinbase or whatever exchange they're using, and they're going to buy 1 Bitcoin. And if they pay $37,129, then they're going to be like, okay, we paid $37,129, but they're going to quote you, say 37,150, right? So they're going to mark it up some percent. I don't know what the percent is. We could look at the margins, but right, they're going to mark it up slightly. And what they're doing is when you buy the Bitcoin, they're saying like, oh, no, 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 we bought the Bitcoin first and then we sold it to you. So we're recording the full value as our revenue. So all $37,150 is revenue. But then they have an immediately offsetting cost of goods sold of 37,129, whatever they paid. Um, I think this is ridiculous, right? Like, look, if we look at Bitcoin revenue, 4.5 billion, and then Bitcoin costs 4.475 billion. So they made $100 million, right? And if you like, what's the margin here? This is like COGS is what, 95, 96, 90, 98%. Like, right, they're making a 2% transaction fee, but they're recording the entire thing. And the reason why I think that this is silly is if like let's take Coinbase. Is this a nice table? Nope. Um, volume. Trading volume. Here we go. This is what I was looking for. Trading volume. So $193 billion of Bitcoin was traded on Coinbase. They're not recording $193 billion of revenue because that's not their revenue, right? Like that's just the amount of currency that's going back and forth on their platform. And then they take a small commission of this. So, right, if we look at their revenue, right, one point, this is in thousands, so 1.1 billion in revenue. So they're recording the revenue as the spread they make on this 193 billion that was traded on their platform. Now, what Square has done to make it look like they're the super high growth company still is they've just said anyone, any cryptocurrency you buy on our platform, we're going to record that entire transaction as revenue, which just completely skews the top line. And I think if you're a sophisticated investor, you're going to see right through this. If you're, a retail investor excited about new tech and you're like just reading the headline and you're like, oh, wow, Square's revenue grew 100% in the pandemic. And then you look at it and you're like, oh, Bitcoin revenue, they must be like doing something crazy with crypto. And the reality is like, no, they're not. They're just kind of lying, right? Like very deceptive what they're doing here on how they're reporting it. And I mean, I'm sure, right, this follows, since they're acting as a principal, they can probably, say that they're acting appropriately from GAAP standards. But it just seems, right, like Coinbase isn't doing this. I would imagine if you go look up Charles Schwab, they're not going to be like every security bought on our platform is revenue, right? And then the offsetting is the underlying cost. Like, no, you record the spread. So anyways, long-winded answer to say, like, I think, their revenue growth is skewed here from 19 to 20. So we'll forecast some of this out. I think the rest of the business I think it's an exciting company, overvalued, but definitely exciting still. So they give us their revenue split out into Cash App and then Seller, and then they break it out by these categories still. So what we can see is, right, like a majority of their revenue does come from transaction-based revenue. So this is the credit card payment processing. Um, if you exclude this Bitcoin piece, right? Like a majority of it comes from this, and then about a quarter comes from the subscription. The hardware isn't doing much. So, it's really this transaction base and these instant deposits on the Cash App. So the first thing is we'll go ahead and forecast the transaction-based revenue. They do give us their gross payment volume, so kind of how much they're doing transaction-wise on their platform. And I'm surprised they don't try to record this as revenue and then just offset, the actual cost of the product or something, right? Maybe they could try something like that someday. Um, but I still think that Bitcoin thing's ridiculous. But anyways, um, I digress. So if we look historically, their gross payment volume, right? It was growing pretty healthy up until 2020. I think that's explained through COVID. I think Square was primarily these like in-person POS terminals. So, everything kind of shuts down for a little bit. So I think you see this slow growth, but I still think, seeing the growth year over year, even with COVID and probably losing out on a quarter, maybe a quarter and a half of really gross payment volume, um, shows that this is still a very strong and growing part of the business. I would not be surprised if in 2021 we see it return to historical levels, if not higher. So I think I'm going to set it for now to 2019 levels. And then, I mean, it looks like historically it's lost, 2, 3, 4% a year. So maybe I'll just take off like 2% a year and we'll do this until, you know, and this is going to get us a pretty high gross payment volume. To be honest, it should. So then we'll go ahead and do this times 1 plus the growth rate here. Oops. So we'll go ahead and do that, and we'll see, right, 510 billion, which seems like a lot, but I think if we really think about it, it's, probably not that crazy, honestly. I mean, it is a good clip, but I mean, in 4 years, right, they doubled here. So if we expect, kind of excluding 2020, but right, having them double in three, like I think it, as long as they can continue to penetrate the market and all sorts of things, I think that this is probably reasonable and fair, and they've expanded to e-commerce a lot through COVID. This might be a higher than expected estimate, but I think it's still probably fair. Um, and then for the The spread they make, we're going to just do the 2.93%. It looks like that's historically where they've been. Um, so we'll do something like that, and we'll see that this gets us our transaction-based revenue we did in one line here, gets us going from about 3 billion to 15 billion in revenue. Um, might be aggressive, might not, but we'll kind of use this as the baseline, and we'll go from there. The next piece we need to focus in on is we're going to start looking at the subscription-based revenue for Cash App, and then as well for the seller application. So if we look historically, right, it's been growing pretty crazy for the Cash App, 134%, 125%, right, going from 221 to 1.2 billion in revenue. And this is really the instant deposit, and as more and more people use Cash App, right, and the more this is used kind of in society, the more that this should grow. Um, I think that this is a hard one to really estimate, and maybe we'll go look at their um, I think this is going to get us some silly number. Um, and it's hard to say because right, this is 5x, right, in 2 years. Can it really, that has it growing 4 times, and you have it growing a little less than four. Like, can they keep that growth? I don't know. And if we actually go look at, let's look at their Q1 real quick, just to kind of baseline ourselves. I think they have a most recent 10Q out, and we can try to see what their Cash App subscription, how subscription revenue is doing in Q1. Subscription revenue, yeah, so I mean, it's, 557 million for just one quarter. So thinking that they can grow this to 2.5 might be aggressive. Um, they're probably trending a little below that, and this is just the Cash App piece. So maybe we take off a healthier, maybe we take off like 35% or something. Still have them grow fast and then kind of slow down the growth a bit. So growing the business about 9 times in the next 10 years might be a good kind of first pass. And if we look at the subscription revenue here, this is really stalled out. This was for the seller base, this is really like web hosting and stuff is what they made it sound like. And if you have like a reservation system or something, so my guess is this is probably like a slower growth business. I know it grew fast pre-COVID, and COVID kind of killed it, but there's a lot of competition in the space, so maybe we'll just leave this at like a 7%, and that gets us to, doubling it in the next decade. But about a $10 billion business for the subscription and service stuff. Hardware revenue, I don't think that this is really material. It operates at a loss. Like if we come up here and look, hardware costs has always far exceeded the revenue. So I don't think that hardware is going to be anything exciting. I think you can just kind of set it what you want, and we'll have, like, it's not going to be material to the business, I guess is what I'm trying to say. Then the Bitcoin piece, right, like, isn't going to continue growing like crazy? Probably, but does it really matter? Probably not. Um, right, like, and I mean, Bitcoin price has already kind of plummeted. I think in 2020, right, we hit like 60,000 or something at one point, right? If we just look at the last year, yeah, we were up at 60,000. I guess that was all 2021. So 2020, I guess it's still doubled. It's still kind of holding high. So, I'm not too concerned about this. I think that this number is kind of completely fabricating the overall story here of like what's really happening with this. But, we'll come up with the margins as well in a separate video to really take that into account. But, maybe I'm just going to set this to like 15% or something. I don't think it really matters because it's such a tiny margin anyways. Right, it's like 2%. So even if you're doing 18.5 billion, it's only 370 million of like kind of actual revenue from that standpoint or profit. Whereas like I think this operates at, right, if we look at the transaction volume, right, that's like a what, 66% margin or cost, 60%, right? So 40% flows through. So if we're looking at, right, this revenue, right, it's, the revenue, like the revenue here on Bitcoin's higher, but the profit is just drastically different. So I don't think getting this part really matters, right? It's not like this is going to become some, with Coinbase and all these other platforms offering it. Like, yeah, I'm sure they'll still have Bitcoin transactions, but it's so immaterial to the bottom line. So I guess we have, revenue going from 9.5 billion to 44 billion, so quadrupling in the next decade. But if we actually back out, if we kind of looked at this X Bitcoin, which I think is probably a much more appropriate way to look at it, um, then we have it going from 5 billion to 25 billion, so increasing 5x. So I think and that's still fantastic growth, but I don't know if a $100 billion valuation will be justified, and we'll see because it's like, right, you're going to have such crappy margins on this total revenue just because this comes through at 2%. And that's before any other like related cost. So, I mean, the Bitcoin piece probably isn't even profitable for them. If I had to guess, they probably have a lot of product development, all these other things going into it that eat away at that 2% that flows through. So we'll see though when we build out the rest of the model. So there we go. There's the revenue, and we'll have in the next video we'll just quickly touch on the margins. I think that'll be pretty straightforward. Probably hold most things constant, and then we'll link up the DCF and see what kind of valuation we get. So thanks for tuning in. Let me know if you have any questions or comments, and I'll get back to you. Thanks.